Good morning, everyone. Welcome to today's webinar. So the topic that we are going to cover today is plan your trades using derivative features and tick query. So let's get started with the webinar. Okay, but before starting with the webinar, I'd like to discuss some stocks that we can keep in our focus for the upcoming week. So let's start with that. So first off, if you look at the Spider software, I have watch list created over here. So first, let's check for Balkrishna Industries. And if you look at the weekly chart of Balkrishna Industries, it was forming a triangle pattern over here. And in the previous week, we saw the breakout of the triangle pattern. And in the current week, we have seen a good up move from Balkrishna Industries. But currently, it has closed below 2234. But if you want positive up move from Balkrishna Industries, it has to close above this crucial level, which is 2234. If the daily candle closes above this level, we can expect positivity from Balkrishna Industries. So this was first. Next, we can talk about Indigo. If you look at the daily chart of Indigo, you will see a good pattern breakout happening over here. It was a strong resistance level for Indigo for the past few months, and the current, and if you check over here, it has given closing about this crucial level, and the previous 2 days have sustained above that level. So it might go positive from here on onwards. Next, we can check for Kamath Hotel. It is something that it's following an upward channel right now. And currently, the previous week was positive for Kamath Hotel, but the thing is, it's near about resistance level. If it's continued to follow this pattern, it might come down from over here. But if it closes above this level, it might continue its positive rally from here on onwards. Next and last, we can check for Railtel. If you look at the daily chart, you can see a trend line following over here. And the previous day, we have seen the breakout of this trend line. But again, this trend line breakout is not enough. But for it to go positive, it has to close above 132 point this level, because it is strong, because it was previous swing high. And it was also support level for it previously. So this will act as a strong level as a resistance. But if it closes above this level, it might go positive from here on onwards. And you can set your target around the swing high of this and this. So these were the breakout stars you can keep on your watch list for the upcoming week. Now let's start with the webinar. So the topic that we are going to cover today is plan your trade using derivative features and tick query. So first of all, what are the key derivative features in our software if you want to trade in option and futures? So first of all, we have OI chart that we can check. It is under the chart section. And next we have comparative OI chart. Again, it is under the chart section. Next we have NSE derivative OI report. It is under the report section of the Spider software. Next we have NSE derivative OI query. The query part of NSE derivative OI report. It is under the query part. Next we have tick query. And in the end, we cover tick query. I have some condition created for tick queries through which we can identify bulk trades happening in the market, and with that we can enter aggressive movement using tick query. So as you can see, most of the features that we are going to cover is regarding the open interest. So we'll need to clear what open interest exactly is. So for that, I'll create a poll for now. I'd like for you guys to answer it. I'll just activate a poll for you guys. So I've launched a poll for you guys. The question is, if A buys a contract and person B sells a contract, what is the total number of open interest over here? If A is buying a contract and B is selling a contract, what is the total number of open interest? Is it 1 or 2 or is it 0? We'll wait for some time to collect the responses and then we'll proceed. Okay, so I've collected the response from every one of you. And the result that I have got over here, 61% have gone for 1, 32% have gone for 2, and only 7% have gone for 0. What is the correct answer over here is, it is 1. And I'll explain to why it is 1. So 61% have gone for 1, 32 for 2, and 7 for 0. So let's understand what open interest exactly it is calculated. Okay. So open interest is something, it is contractual basis. Okay. Open interest contractual basis. Now for open interest, it is the outstanding number of contracts which has not been settled yet. So to create a contract, what is important? There has to be a buyer, there has to be a seller. To create a single contract, there has to be a buyer and a seller. So that's why when a contract is created, there is a buyer and a seller, and that creates open interest being 1. That's what the current answer was, 1. So if there's a contract created, both buyer and a seller are required, and after that, the open interest, the total number of open interest is 1. And for example, carry on with the question. For example, the next day, P buys 5 quantity and Q sells 5 quantity. Now, what will be the open interest, total open interest? It will be 6, because previous day it was 1 and current day we have 5. So the total number of OI will be 6. So that's how OI is calculated. Now, OI is very important for us to analyze the data for options, basically. So let's check why to check the OI data. So first of all, to find the crucial levels of the day. There are many traders who trade according to the OI data. So they find the crucial level of the day, of the current day, using the OI data. To find the range of the market, you can find the range bound of what the market is going to be using the OI data. And the next would be to check immediate support and resistance level, from where market might take immediate support and from where it might get resistance. To check that data, you can check the open interest data. To analyze the trend of the market, again you have to check the open interest data. Coming to the next slide. So okay, so the first feature that we will cover today is open interest charts NSE derivative. Now this is the most basic feature when it comes to the open interest part. So under that, I have something written over here. We have the range of Nifty and Bank Nifty 1000-point range. Now what does this mean is, when you open the software and you go for open interest chart, I'll explain you first and then we'll go to the software. So when you are analyzing open interest for Nifty and Bank Nifty, when I'm talking about indexes, so the range that you have to select for the strike price is the 1000 points from the underlying price, from where the current market where it stands, 1000 point in the money and 1000 point out of the money. You have to select the 1000-point range, and we have written writing perspective over here. We'll understand this one by one in the software only. I'll switch to the software once. Okay. Now to open OI chart, you have to go to charts. Under that, over here you have open interest charts NSE derivative. You have to click over here. So this data will appear in front of you. Now it will be blank. What you have to do is, first of all, this option of underlying is over here. So you have to select an underlying. For example, if you're checking for Bank Nifty, you have to select Bank Nifty as the underlying. If you want to go for Nifty, you have to select Nifty from over here, or any other stock also if you want. We'll check for Bank Nifty now. Then the spot price, where the current market, where it stands, the near future and the next future is given over here. You have to select an expiry from over here, and this is the range I was talking about. What the range that we have to select is, we have to select the 1000-point range. So the spot is currently 42,300. So what we'll do is select the range as 41,300, 1000-point less, and 43,300, 1000-point increased plus. This is the range that we'll select. Then we click on refresh. So this is the range that we have, 41,300 to 43,300. So first off, by default, it will be ticked on current OI. Now what does current OI means? So we have selected currently on the expiry of 19th. So from when this contract has opened, from that day till the current day, how many open interest is there? It is showing us that data. So this is the total open interest from when the contract started. So if you look at this, what we can say is, I'll open the Bank Nifty chart in the background as well. I'll open it on intraday. 5-minute time frame from now. That's how the data looks according to open interest. Yes. We can see the chart, and you can see the OI chart here as well. So what we can see over here is, the red bar indicates put and the green line indicates call. Okay, just a second. Now before explaining this, I'll like to create one more poll to check. One thing I want to understand. I'll just create a poll, another poll. I'd like you guys to answer that. I hope everyone can see the poll. I'd like for you guys to answer the poll. I will wait for some time to collect the responses. The question is, the highest strike price of call. So the strike price with the highest call OI would act as a support level or a resistance level. Okay, so we have collected the response, and the response that we have over here is 22% have gone for support level, and around 78% have gone for resistance level. So let's check what the correct answer is. So the correct answer is the one who have chosen resistance level, because where the highest call OI is would act as a resistance level. Now why do I say that it will act as a resistance level? There is a reason behind it. So the market is dominated by seller. The market that we are trading in is a seller, writers dominated market. So whatever OI that we see, they have to check from the perspective of a seller. So whenever I see open interest in call, I consider that to be call writings data. And whenever I see open interest in put, I consider it to be put writers data, not the buyers data, because there are more number of sellers with respect to number of buyers. So that's what the overall open interest we have to check from the perspective of a seller or a writer. That's what we are going to do. So that's why highest call OI means, for example, let's take this for example. For example, someone who has shorted the position at 40 to 500 in call OI. For example, there is a writer sitting over at 42, around 40 to 500, around this level. You can see it has acted as a resistance level overall. For example, if you have shorted your position at over here, you'll incur a loss if the market goes beyond 40 to 500, above 40 to 500. So what does the call writer need is the market to stay below 40 to 500. And that's what happened in the chart as well. The put writer of 42,000, the strike price with the highest put is 42,000. So what the put writers here intend is the market to be above 42,000 because they are put writers. So they want the market to stay positive. So 42,000 would act as a support level. The resistance level that you can see over here is 42,500 from the where the market has stopped the previous day and came down. So like this, you can find the crucial level of the market and the support and resistance level. So this is the current OI data. As I already told you, is the overall data of OI from when the contract started. So you can see that where is the highest put OI? It is in 42,000. And in the same strike price, you can see call OI as well. It is half as put writing. So what we'll expect from 42,000 is that it should act as a support level. Okay, it should act as a support level. Now let's see how it has acted. Around 42,000, you can see it was congested over here, but when we got the breakout over here, it acted as a support level, and the market has been above after that. So it acted as a support level. Now what we need to do is, but here it is like it is a little dicey because even the call writers are standing at this same position. So at that time, what we can do is we can open a difference from previous day. Now what this tells us is difference from previous day means it will tell you the current day OI basically of the current day. This is a difference from previous day. If it has gone above the zero level, which means it has increased from the previous day. If it goes below zero level, it has decreased from the previous day. So what we can see at 42,000 in the current day was it has increased drastically and the call didn't increase as much. So even though in the current OI, you can see the call writers are half as put writers, but in the current day, only the put writers were active and the call writers at that position were not active. So it was a short indication that the market will go positive from here on onwards. And if you see the difference from previous day options, you will see there was no resistance nearby. You can see continuous put writers were in the control of the market, and the only place where the call writers were active was at 42,500. You can see 42,500, the call writers were active over here. And even look in the current OI, you can see 42,500 call writers are active over here. So they have hold their position 42,500 and they don't want the market to go beyond this. So that's why we saw the resistance that happened over here. So the basic information about OI you'll get through OI chart and it's a derivative OI chart. And what you can get over here is total number of call and put. And what you have to see is the PC ratio. Even this can help you to identify the trend of the market, the put call ratio. So this was the basic idea that you can get from the OI chart, the crucial level for the market for today's state. So what two data that you have to check over here is current OI. First of all, you have to check the current OI and to check the strength of that particular support and resistance level in the current day. You have to check difference from previous day. This will give you a clear idea of what is happening in the market today. So this was OI chart. Next up, let's go back to the PPT. Yes, so this was OI chart. We have covered almost everything under OI chart. Next, what we can check, the next feature would be comparative OI chart. So what is written over here is to check the momentum of OI in different strike price. In comparative OI chart, you can compare different open interest strike price and the momentum of it. So that's the comparative OI chart is a little important to understand because in this we can compare different strike price. And what I've written over is 1% range of underlying price. So what does this mean is when we go to software, I'll make you understand what this means is. And this is the detail. When you check the detailed data of the call of the comparative OI chart, you should always prefer going with the percentage change option. And the next is call put cumulative. You'll understand this in the software only. Let's go back to the software. So under the chart section, you have the option of comparative OI chart. I'll open this window. Now what you have to do over here is this will be a blank window when you open it for the first time. How you have to select the data over here is, first of all, you have to click on select 1 plus derivative. If you want to add multiple strike price by one at once, you have to click over here, and this is the setting that you have to go for. You have to select, go to select, and then select Nifty, Bank Nifty, or any other stock that you want. You can go for first expiry if you're interested in first expiry. Then go for call put both. Keep it continuous and option type of as all. Then this is what I was talking about. When you're going for Nifty and Bank Nifty indexes, should keep this range as 1% because 1% range is enough from the underlying price. And you have to tick over here. You have to click on show. Then you have to select all. So all the strike price will be selected. Then you have to click on add. So it will be shown over here, all the strike prices, which are near 1% of the current spot price. So this data will appear in front of you. And after that, you have to click on intraday today. So the intraday data, intraday momentum of all the strike price you can see over here. And then you have to click on lots. And as I told you, when you're checking on detail, you have to prefer percentage change, because this can give you a clear idea of what the momentum of today's market is. So I'll open this window with icon chart. I'll just maximize the screen a little bit. Yes. Now what indication that we can get from the detailed chart is we can check the momentum of OI. So from the very beginning of the market, you can see it was upward 40 to 400, and the most it was 40 to the black line that you can see over here is 40 to 200 call option, and you can see the both of them were going the same direction till this time, and after this time around 12:26, 12:27, the call writers decreased. The OI of call writing decreased, and the OI of put writing drastically increased. You can see it increasing. So all the increasing OI were of the first line is of put 40 to 400, second of 40 to 300, next is of 40 to 200, then we have 40 to 100. So you can see most of the active strike prices were of put writing only. So we can get a clear indication that if put writers are more active in the market, then we are going to get a one side direction and positive market. That you can see on the chart as well. It was a clear positive market for us in the past day. You can see because most of the strike prices that were active were of put writing, and the one strike price which was active in the morning, which was a 40 to 100, decreased after 12:30. So after 12:30, we had a clear indication that call writers are removing their position, the put writers are increasing their position in the current market. So like this, we had a clear indication that the market will go positive. So one more setting that you have to do over here is you have to make it as 1. So every time the data comes, every 3 minutes, it will get refreshed automatically. So make it as 1. So when you check in a live market, you can get the data refreshed automatically. So this was the detailed part. Next, you can check is call put cumulative. Now, what does cumulative mean? Cumulative means the addition. Addition of what? Addition. So the green line indicates call writing, and the red line indicates put writing. So now what cumulative has done is it has added all the call writing data, and in the put side, it has added all the put side data. So you can get two simple straight line. In detail, it was multiple lines that you have to observe. But in the call put cumulative, you simply have two lines through which you can identify the current trend of the market. Yes, you can check the current trend of the market. As you can see over here in the morning, what you can see, first of all, what you have to do is if you ignore this data till at least 9:30 to 9:45, it is okay, because what's happening in the market is someone who has carried the position from last day would square off their position, if it's in positive or negative. So that's why it is a little fragile at this time. So you should analyze it after some time when the market is a little bit settled, after at least 15 to 20 minutes. After that, you have to check the momentum of the data. So what we can see over here is call writers were increasing from this point. Call writers were continuously increasing, and the put writers, it was not increasing or decreasing, it was going flat. So that's why in the early morning you got a negative market over here. The indication was given by call put cumulative because the call writers were continuously increasing, the overall call writers, and the put writers were decreasing. So you got a negative market, and after that, what you can see is both of them were around going flat only. Put writers was completely flat, and call writers was increasing but not as much. So over here you had a negative sentiment but not a strong negative sentiment over here. But after this time around 12, after 12, I guess this is the time of 12:18, what you can see over here is the call writers steadily started increasing, that you saw on the detailed part as well. After some time, after around 12:30, 12:50, that you can see the put writers gradually started increasing their positions in put writing, and you can see it was moving upward. Now, what we want from cumulative chart is both of them should be going in opposite direction. Like this, you can see it is going positive. Call put writers are going positive, and call writers is gradually decreasing after this time of this top. It is of 12.6, and you can see call writers are decreasing and put writers are increasing. So, like when you get a data like this, when both of them are going in opposite direction, you get a strong positive idea because put writers are increasing and call writers are decreasing. So it was a strong positive idea for the market. And if you would have drawn this level, you would have waited for this level to break out. And with this, you were getting an indication that the call writers are decreasing and the put writers were increasing. So you can double confirm your strategy or anything that you're using through the open interest chart as well. So from here on onwards, around 12.6, the market, it was reversed and everything you can see it went positive till the market end around till 4.5. You can see the market was positive till this time because both of them were going in the opposite direction. So you want market sentiment to be like this. When both of them are going in opposite direction, you get a strong trending market. And even in this position, you can see both of them are going in the opposite direction. But after this time, what you can see is at around 227, the call rate is gradually started increasing, the put rate is gradually started decreasing. So again, they were going negative position. So you saw this negative trending market. And in the end, what happened in the end was both of them were started gradually decreasing. So what to do at this time when both of them are going in the same position? So it is expected that the market will be sideways, but it is not always like that, that when they are both going the same direction, the market will be sideways. So at that time, what you can check is the put call ratio. Now, this is the overall chart that you can observe. This gives you an overall idea what the current trend of the market is, the put call ratio. And in the end, it was showing you sideways only over here. It was not a strong positive or negative. It was moving the same direction. But over here, you can see it was strong positive. Over here, it was strong negative. When both of them are going the same direction and when the put call ratio is not giving any signs of negativeness or positive, at that time, you can wait. You don't have to trade in every candle. At that time, when the signal is not very positive, at that time, you should wait. So this was the comparative OI chart. Again, I'm repeating, you should always keep this as one because whenever the data come, it will get refreshed automatically. You don't have to click on refresh every time, it will get refreshed automatically. When you're checking detail, keep it in percentage. When you're checking for call put cumulative, this is the data that you want, both of them going in opposite direction to give us a strong signal. And next is put call ratio. So I hope comparative OI chart is clear how to use it. Next up, let's go back to the presentation. The next feature that we are going to cover today is NSE Derivative Open Interest Report. Now, regarding this, again, I have a poll created for you guys. So I'll activate the poll. Says the question that I've created in the poll is, if you're an option buyer, what data will you prefer to look at? And the options are long build-up, short covering, or short build-up. Okay, we'll wait for some time to collect the responses. So the options are long build-up, short covering, or short build-up. The data is in front of you for every LB, SC, and SC. You can check this also for giving your response. I'll wait for some more time, and after that, I'll continue. Okay. Okay. Now, I'll have to tell you the responses. The responses that I've gotten over here is 76% have gone for long build-up, 22% have gone for short covering, and 2% have gone for short build-up. So the most correct answer over here would be long build-up, the LB. So I'll close the poll for now. Continuing with the NSE derivative OI report. Why I said LB would be the perfect to look for an option buyer, because what's happening in LB is LB means first of all long build-up. Whenever we go for the open interest, it can be segregated into 4 parts. The option strike price it can be segregated into 4 parts. One is long build-up, next is short covering, next is short build-up, the last will be long unwinding. So what you can check over here is first we'll cover long build-up. Now what happens in long build-up is price up, which means the premium of the strike price is going positive. The premium is increasing with an increasing OI, which means people are buying it even though its premium is increasing continuously, which means if the price is going up and still people are buying it, which means it is the data for buyers, which means long build-up means it is the data of buyers. So what are strike price that you will get in long build-up is the data of buyers, because the price is increasing, which means the premium is increasing, and with that the open interest is increasing. So long build-up is the best data that a buyer can check. The next would be short covering. Now what short covering means is price up, wide down. Short covering means whoever has shorted their position, covering it right now, which means there is fear in market because the prices are going positive only. That's why the OI is going down. So OI down means whoever has shorted their position, they have fear in the market that will continue to be positive. So that's why they are gradually squaring off their positions. They're exiting from their position. So even you can look at short covering because there is fear in the mind of writers over here. So the first would be long build up and the next would be short covering for buyers. And SB was wrong. Was the wrong answer. Why? Because in SB what's happening is the prices are going down, the premium is going down, and the open interest is increasing, which gives you a clear idea that whatever strike price that you'll get in short build-up would be the data of option writers, because the premium is going down and still people are creating positions because the OI is up. Premium down, OI up, which means the data of writers. And the next is long unwinding, in which both of them are going down, which means there is fear in the mind of buyer that the price is going down. That's why they're slowly and gradually exiting their position. That's why the OI is down and the price is down. Now in the software, we are directly filtration to get the strike price of SB, SC, SB and LU. So let's check. Okay. So how to differentiate between every strike price? You have to go to reports. And under that, the most important feature would be NSE derivative OI report. Okay, I open the NSE derivative OI report. Now, how to use this is first of all, for example, if you're someone who trades in Bank Nifty, you have to go to select, and then you have to select Bank Nifty over here. You can select different stocks or indexes over here as well. You have the option of underlying group, and if you want to go for the whole FNO segment, you can go for all as well. But I would like to prefer you, if you're going for Bank Nifty, only check the data for Bank Nifty only. You should always be focused on one thing at a time. So if you go for Bank Nifty, it would be good. Then you have to always click on active today. Only the strike price which are active today should only be shown over here. Active today. Then first expiry over here. We should always go for both call and put to get the overall data of the market, both call and put. Now first I'll keep the filtration as all. So I'll get all the strike prices over here. It is not accounted under filtration. Then you can tick over here OI in lots, OI percentage change. Then you can keep this as 5% over here. It would be by default, it would be 5% only. Then you can make this as 1 to get it refreshed automatically. And you can choose the absolute delta that you prefer it. So the delta for the buyers, the best delta range would be from 0.40 to 70 only. So I've kept it over here 40 to 70, the delta value. So all the strike price that you'll get over here, the delta value would be between 40 to 70. Okay, the first we have ticked over here is all. The next we'll go for LB. So it is written over here, LB means price up, OI up, which means both the things are in positive. People are buying, creating position even when the price is going positive, which means they have a sentiment, a bullish sentiment towards this. So this is the yesterday's market data. So what you can see over here is LB means buying data. I've already told you for buyers, LB is important. So you have to focus on LB. And so what you can see over here is you can see continuous call strike prices over here. Multiple call strike prices, which means it indicates there was call buying in all these strike prices. It was call buying happening over here. Why I'm telling it is call buying? Because percentage change, which means the premium was increasing and the open interest was also increasing, which means people were creating their position and the market was positive as well. So this is the data for call buyer. So if you're an option buyer, you can focus on LB always. So whatever trending strike you can get over here, you can create a position in dash strike prices according to the price action that you look for. So this is LB. Next is SC. Under SC, what do we have over here is only one strike price of call. So what this means is people have created short position in this level 40 to 100, but since it was going positive only, people started, the writers have decreased their position in this. That's why the OI changes in negative. And it could also be the data of the someone who has bought call at 40 to 100, but currently they exited from the position because they are squaring off the position in profit also. So it could be that also, SC, OI decreasing and the price premium increasing. And the next would be SB. Now this is the data for writers. So an option writer, you can focus on SB, short build up, because you can see the price going down, which means the premium of that particular strike price is going down and people are creating positions. So these are the trending strike prices you can focus on, but it is in SB. So you can see multiple put strike prices. So the market was positive. So that's why we're getting more put writers over here. All the strike prices, put writers were focused on. You can see the premium was going down of put, but still people were creating their position. That's why it is in SB. Price down, Y up, short, build up. The next is in long unwinding. Let's see if we have any result over here, long unwinding. So currently, we don't have any result over here. And as I've already told you, this is the data for writers only because buyers are exiting their position from this because the price is continuously going downward. So the data for buyers would be mostly LB. You can focus on SC also, but I prefer going for LB because both the things are in positive. And if you're an option writer, you can go for SB. The data you can check over here of the trending put strike prices in which put writers are creating currently holding their position. So this was derivative OI report. You can check this data. You can use this during live market as well. It is mainly for live market only. You can check the trending strike prices from over here, from where people are creating their position. Again, I'll repeat, LB and SB would be a main to check, as LB for buyers and SB for option writers. And choose this as 40 to 70. Keep refresh minutes as 1. And again, if you are LB is for positive only, but if you want even more positive, you can select open is equal to low over here. So if the strike price, if any particular option strike is creating open is equal to low, it will be shown over here. Currently, previously we had nothing over here. And in SB, you can select open is equal to high for a strong negative sentiment. Let's see if we have anything. No, previously we didn't have anything. But if you select SB with open is equal to high, it is a strong negative sentiment for you guys. So this was all regarding the derivative OI report. The next feature that we are going to cover would be NSE derivative OI query. So this is an underrated feature of the software. I'll explain it to you in some time. Let's check NSE derivative OI query now. Now, why do we use this? Why do we use NSE derivative OI query? It is the query, it is scanner part of the NSE derivative OI report. What we checked just now was derivative OI report. Now, OI query is a scanner of that particular thing. So, why do we use this is to select the most active strike price in the current market. To select the most active strike price in the current market is important to go with the volatility and make profit in that. To filter strikes according to the open interest. Now, if you want to select strikes according to open interest, you can use derivative OI query, and to identify bulk trades happening in the market. With the current momentum, you can enter in that trade and you can make profit. Now let's check the data that we had in the previous day for NSE derivative OI query. So let's open. Under query part, you have this NSE derivative OI query. So open the first window. You can open 2 windows at a time. So what you have to select over is same. You have to go for select Bank Nifty if you're a Bank Nifty trader. Then you have to go for near month call put. Then this filtration is important. So what you have to select over here is if you want the trending option strike prices, what you have to select, you have to filter it according to the open interest, the absolute open interest change. So how to identify that there are many people interested in a particular strike prices if the open interest is increasing currently in the market. How to identify that? You have the option. You have this option over here. You have to select 10% open interest change in the last 20 minutes. So if in any of a strike price there is more than 10% of open interest change, be it positive or negative, in the last 20 minutes. So that means that is a trending strike price. And if people are more interested in that strike price, you can enter that trade. And with the increasing IV also, you can make profit in this. You can just go with the momentum of the market using this and you can enter a trade. And absolute delta I've chosen here is 40 to 60. That would be enough to get this data. Now this is important to identify bulk trade. Now this was according to open interest, and with that we want bulk trades to be happening in the market. So we have to stick in both the condition, and you have to keep OI in lots as 30. So in every trade, the lots that is traded should be more than 30 or more than 30, and the quantity in lots should be more than 30. So if you tick on these two options, you'll get the bulk trades happening in the market. And then what you have to do is always select live OI, go tick on both of this condition, and just click on refresh once. So you'll not get multiple results in this throughout it will not be continuously coming into your picture. But if you check for the overall market, we have got multiple results over here. So how to trade according to this is, what you have to check basically is, if you get, for example, whenever you get the data in this, you get multiple data at once only. So as you can see over here is, check from the morning only, OI time. So the first data that we got over here was at 9:35. Continuous result we were getting in 9:35. So it will rarely come in the result section, but once it comes, it will be in bulk trades. So that's why we have selected bulk trade over here. So whenever it will come, it will be in multiple strike prices. So what we have gotten over here at 9:35 is got both call put, and the open interest increasing. So at that time you're a little dicey over it. So you'll have to wait for some time. What the data what have to wait for is, whenever you get multiple call strike price at once, and if you see the open interest increasing. So what does that means is that people are writing their position in call currently. So the open interest chain that you're getting over here is in the last 20 minutes. So this is not the overall open interest chain. This is the open interest chain for the last 20 minutes. So if you see, in this time 9:38, put writers were highly activated at this strike price. In the last 20 minutes, the percentage change was around this much percentage. So at that time, you can get an idea. If the put writers are increasing, you can get a positive idea for at least some time, because put writers are highly active in this strike price at around 9:38. So when you get a data in this, you can just enter the trade according to the momentum of the market and make profit according to it. So if there is open interest increasing in any of the strike prices, this is the data for throughout the day till 9, from starting with 9:15 till 3:30. This is the data for throughout the day. You can check. Now what I want you to do is, you can run action replay in your system. You can use it during Monday also, but if you want, you have Saturday and Sunday for your aid. So what you can do is, you can check. You can just run the action replay. Select this. Keep the action replay second dose 1 or 2, not more than that, and check the overall data that you're getting over here. So what you want the data to come over here is, you want, if you want to go for positive side, you want put writing data, you want put writing and call buy. If you get call in positive, and if you get put the writing data, at that time you can enter the trade according to the momentum of the market. So whenever the trade will come, it will come in a bulk trade. You can see in just in 3:27 you got multiple strike prices. So the data here will rarely come, but whenever it comes, it will be in a bulk trade. So you'll get multiple strike price at once. So you will be alerted that there is momentum happening in the market, and you have to check whatever the strike price is, not the strike price, but the call option. Is it call or put? If it's put and it is in green, that means put writing is going on. So you can go for a positive trade at that time. So you'll have to be quick with that, because you just have to enter. Now after some time you have to exit from the trade, because this is a bulk trade. So it will help you with the momentum of the market just for some time. So you can use derivative open interest query for that. So to understand this in deep, you'll have to run the action replay. You can use it during live market as well, with yourself only. So what you have to do is just run the action replay of any market, be it expiry or anything. Just check the data that you're getting over here and check with the price chart. You check the momentum as per the data that is coming over here. So it will be bulk trade. So the momentum that you'll be getting over here in the chart would be fast. So you'll have to be quick with the entry and exit. And the strike price that you would be selecting would be the at the money strike price at any time. So this was derivative open interest query. And next, the last and the most important, the feature that we are going to cover today is tick query. Now, why do we use tick query? To identify bulk trades happening in the market. If you want to identify bulk trades happening in the market, the most important feature that we have over is tick query. The condition that we'll be selecting for tick query would be, it would be a price related condition, as we always do. So the condition would be close equal to high or close equal to low. If any option contract is creating close equal to high or close equals to low, which means there is a momentum happening in the market, and with that we'll select a quantity and OI lots to identify bulk trades. So how to use this is, again, we'll get back to the software. And this is the most important feature. Go to query, tick query. Now what you have to do over here is, I already have the results over here. I'll just minimize it. Yes. You have to choose the setting as this. In quantity, you have to select 30 and tick over here. Then you have to click on and this time. All the previous condition that we have given for tick query, you have always chosen for or, but this time we want bulk rate. So we want quantity and value both in our rate. So we'll select and then we'll select value and we'll keep it as 50 lakh. So 30 and 50. And the condition that you have to select over here is close equal to high or close equals to low. So close equals to high or close equals to, you have to select over here. And you have to go to study section, select NSE options over here. NSE options. So the most of the data that you're getting according to this condition would be mostly of Nifty and Bank Nifty. So if you're going for bulk trading with this much condition, you'll get only data for Nifty and Bank Nifty. To get stock data, you have to reduce it a little bit, the quantity and value. But this condition is mainly used for indexes. So you can select Nifty and Bank Nifty. You don't have to select Nifty and Bank Nifty, you just have to go for NSE option. And the only data you'll be getting over here would be of Nifty and Bank Nifty. As you can see over here, it is mostly of Nifty and Bank Nifty only. So again, you have to run it from the early morning. So why we use this to catch aggressive trend in the market. Whenever, so we all know that the market is dominated by writers. So whenever there is bulk trading happening in the market, we can just enter the trade with that momentum and we can expect to make profit. Now, how to use this is, for example, first of all, I would like for you guys to change the setting as, go to settings, go to the color setting, and when you go for tick query, select this condition, select the color as this. So you don't have to differentiate between the writing and the buying and whatever strike price it is happening, just select this condition. If it's for positive, up, go for green. And if it is for negative, go for red. And then click on apply to full row. So your tick query will look like this. So what this is telling me is, for example, call is in red, which means call writing is going on over here. And if its put is in green, green means buying, red means writing. If it call is in green, which means call writing. And if its put is in green, it means put buying. So again, tick query, if you select this condition, rarely you'll get any result during the market, but whenever you get, it will be in bulk trading. Again, you can see just in around 9:15, you are getting multiple levels over here for Nifty, Bank Nifty both. And what you're getting over here is put buying. It is at 9:15, just the market started and the bulk trading was happening in the market. And you can see continuous put buying, and with the red, you can see call writing. So what this idea gives us is negative sentiment for the market in the very morning. So you have to be quick with this decision that you're making with tick query. You cannot be in dilemma that if you're entering or not. If you're getting this result of put buying and call writing in the early morning only, because if you check the early morning candle, get multiple results over here because the volatility is high at this time. During the market, it could be at any time, and the next high volatility would get over is at around 3 p.m. So you have to mainly focus on the morning market because you'll have to be quick with it, because whenever you suddenly get the data for multiple strike prices, so you have to always go for, you're going to select the strike price, you have to always go with the at the money strike price. And if you're getting data continuously for put buying and call writing, which means it is a negative market. So this is for intraday 5 minute. I'll open the intraday 1 minute candle. So this can be used as a scalping perspective. It cannot be used for a directional view, but it should be used for a scalping perspective. So if you just look at the intraday 1st minute candle, you will see it was a strong bearish candle, and in the 9:15, as the market started, you started getting the signals of, so you have to just enter the market with this momentum. So if you're entering over here also, if you're going for Bank Nifty, you can increase your quantity. Again, you will have to also go with bulk trading also. You have to increase your quantity, and you can exit the position at around 13 or 10 points. So even this candle will give you, at least you can see the morning momentum was strongly negative because it was continuously controlled by call writers and put buyers. So put buying means negative and call writing again means negative. So you can see the morning momentum, it was strongly negative starting from 9:15 till 9:19. It was a strong negative. So if you would have checked this tick query result according to this condition, you could have gotten a strong trade. So even during the market, you'll get multiple results over here, but these are not something you'll be aware of. The time that you'll be aware of would be at around 9:15 in the early morning because the volatility is high, at around 3 p.m. because at that time you can see big candles forming. Even during the market, you'll have to be alert. Whenever something like this comes, you have to enter the trade. You can see at around 12:48, you started getting data for put buying. Sorry, put writing, which is negative because it is a red color. So put writing again gives us a positive idea at 12:48. If we check the 12:48 candle, it would be a strong positive candle. So if you see even at 12:48, just in this seconds also, we're getting multiple trades. So it will not something like you'll be getting trades every 5 to 10 minutes, but whenever you will be getting, be it 30 minutes or 1 hour, you'll be getting multiple trades at one time. So if it is showing a put writing, an option buy, you can buy the at the money strike price of call. You have to always go with at the money strike price. So if you want to make the most with the implied volatility, you have to go with the at the money options always. So this was the data for throughout the day. You can check it using in your system as well. Just run this system in your action replay and you'll get the results. So how you can increase its efficiency would be, for example, as I told you, I had created this over here. See, I was waiting for the breakout of this. So at this time, for example, just give an example, I was waiting for this pattern breakout. Bank Nifty was creating a triangle pattern. I was waiting for the breakout. And whenever you are waiting for a breakout, you'll see candles like this forming. So sometimes what happens is you miss the trade. You miss the trend of the market. To catch the trend of the market, to catch the aggressive trend of the market, you have to always check with tick query. So if you're waiting for this level to be broken, and at that time, if you're getting an indication in tick query that there are more put writers and call buyers happening over here, you can directly enter the trade. You don't have to wait for the closing of this candle. If it is showing you that in the market, the aggressive bulk trading is happening in put writing and call buying, you can enter the trade at that time simply, and you can make profit of throughout this candle. You have to be quick with your entry and exit. So if you get into at 146, the trade that you'll be going for is the 1 minute or 2 minute candle highest. You're not going to wait. This is not for directional view. It is for intraday scalping point of view. So you get multiple trades over here. What you can do is that, again, I'm telling you, run the action replay of yesterday or day before yesterday's data and just select this condition, close equals to high or close equal to low. And you have to select the bulk trading, this as well. But quantity change and the value should be more than 50. So even if you're using super trend or any indicator, if it is just about to close above the super trend, and with that, if you get indication over here is that the market is positive, you can directly enter the trade. You don't have to wait for the closing of that particular candle. You can just make the most of the trend, aggressive trend of the market. So you can use this using tick query also. You usually have to write down the condition, close equal to high or close equal to low. And this is the parameters, 30, 50, you have to tick on both. And under select stock selection, you have to go for Nifty NSE option. The only data you'll be getting according to this parameter would be mostly of Nifty and Bank Nifty. So you can use this for your aid. I just want all of you guys, you have 2 days, Saturday, Sunday. I want you guys to test these results of close equal to high, close equal to low. Check it in intraday 1 minute candle and keep the action replay as 1 or 2 seconds, not more than that. Because if you keep it more than 5 seconds, you'll miss the trends. So keep it 1 or 2 seconds highest and check the market of the morning market or 3 p.m. market, and you will see the result that you're getting in tick query is perfect according to catch the trend. So this was all about tick query. So I'd like to thank all of you guys for attending the webinar.